This is the primary factor for my prediction that Nvidia's stock would increase tenfold over the next 3 years. Strategic design choices made by Nvidia include the use of particular optical cables and HBM, high bandwidth memory. They have a significant competitive advantage as a result of their choices, since they have effectively purchased the entire supply of these technologies worldwide. Since Nvidia has obtained those resources, you will be in a challenging position if you are attempting to produce comparable chips. Where have you been this week? I was in France, in Paris. Why did you go there? A significant AI conference was held. To get everyone enthused, Grok creator Jonathan Ross and I had a 45-minute fireside conversation to get things off. Does anything intriguing emerge from it? Yes, I did remember a few things that Jonathan shared. He began by outlining Nvidia's strengths, which include machine learning and inference, respectively, as well as their areas of commercial expansion. He did, however, highlight a conflict. The learning and inference elements are nearly in direct competition with one another. That was a crucial explanation. Second, he stated that given the demands of businesses like OpenAI, Meta, and others, Grok will have 50% of the available inference compute by the end of next year, provided they fulfill their roadmap. Across all of the main models, they are able to accomplish this with a smaller physical footprint, higher token per second processing, and reduced power usage. This is a pretty excellent insight. It will be more cost-effective and efficient. I'm attempting to obtain a recording of our excellent conversation so that we can distribute it. The contrasts between Grok and Nvidia were clearly outlined, so everyone interested in Nvidia should pay attention. To be honest, it was cool to be in Paris. What is Nvidia's reaction to the notion of a completely distinct chip category that is solely concerned with inference? They have to deal with a structural innovator's dilemma, which makes things difficult for them. High-throughput optical cables and HBM are key components of Nvidia's architectural choices. With regard to these technologies, they have practically taken over the market. For their current designs, this method makes logical, but Nvidia may be at a disadvantage if a rival adopts a completely different technique that gets around these supply limits. I didn't completely understand this until that talk, but Jonathan did a great job explaining it. It's also critical that venture capitalists and chip entrepreneurs alike comprehend these distinctions. Because Nvidia controls those resources, they are in a difficult position if they are investing in businesses that rely on HBM or particular optical cables. Similar to how Intel dominated the CPU industry in the 1980s and 1990s, Nvidia excels at this as well. Intel established clock speed as the key performance indicator, promoting transistor density and Moore's law as indicators of worth. The majority of customers followed the Pentium upgrading cycle since they were unaware of the subtleties and believed that clock speed was the primary performance indicator. Similar to this, Nvidia has developed measures in AI that influence the market's assessment of value, despite the fact that they don't necessarily correspond with what is actually important for performance in real-world applications. Nvidia is a really significant business. They're performing exceptionally well and employing the same tactics Intel employed to stay in control. The sustainability of certain of their supply chain and technology choices, however, raise serious concerns. As my knowledge has grown, I believe that one important lesson is that those choices may not be sustainable. We're hoping to be able to make the talk's recording available soon. Given the significant distinctions between Nvidia's strategy and others, everyone considering investing in Nvidia should pay attention to what Jonathan had to say. At 10:20 a.m. Eastern Time tomorrow, Nvidia CEO Jensen Huang is expected to speak at the Goldman Sachs Communacopia conference, which investors are keenly anticipating. Investors are interested in learning more about the price of the company's next semiconductor. Nvidia suggested during the most recent earnings call that gross margins could drop to the mid-70s, which could become problematic if costs increase. Although the stock is down about 20% from its most recent peak, it has still increased by more than 130% in the last 12 months. Today, Nvidia's stock is up over 1% after plunging sharply yesterday due to rumors of a DOJ investigation. According to reports, the DOJ is looking into whether Nvidia is punishing customers who don't only utilize its AI hardware. Nvidia said that Nvidia wins on merit has reflected in our benchmark results and the value to customers, who can choose whatever solution is best for them. Although there is confusion around this probe, Wall Street analysts such as Stacy Raskin of Bernstein believe it is too soon to estimate the regulatory risk. Similar incidents involving Broadcom, AMD, Qualcomm, and Intel created alarm at the time but had no long-term effects. With elections approaching, the overall political environment may have an impact on how antitrust enforcement targets large tech firms like Nvidia. Since Nvidia is still the only game in town when it comes to AI compute, some experts say this probe could be a short-term headline risk, while others believe that their dominant position in AI infrastructure is unlikely to alter anytime soon. Despite the regulatory worries, some investors, such as Harvest Portfolio Management's Paul Meeks, see this as a possible purchasing opportunity. He contends that Nvidia is still expanding quickly and that the DOJ investigation may not have a significant effect on the company's long-term outlook. He advises holding off on making another big purchase until Nvidia's stock retests its most recent lows. Yes, let's pick up where we left off. Paul Meeks also noted that although still high, Nvidia's valuation is now more realistic than it was at its peak. He pointed out that with projected earnings growth of 42%, the company is already pricing at almost 29 times next year's earnings. Because of this, Nvidia's price-to-earnings growth (P/G) ratio is roughly 60 to 70% lower than that of the S&P 500 as a whole, indicating that despite its high price, it may still be a desirable investment due to its potential for growth. Meeks thinks that even though Nvidia's growth might slow down a little in the near future, the firm still has a bright future. He is especially upbeat about Nvidia's standing in the AI industry, pointing out that the AI boom is only getting started and that Nvidia will likely take a sizable chunk of the trillion-dollar AI capital expenditure market in the years to come. Meeks believes that Nvidia has established an unbreakable moat through its innovation, scale, and dominance in AI hardware, just like Intel did throughout its ascent, despite the DOJ investigation and other concerns. He also makes comparisons between Nvidia and other tech behemoths like Apple, Google, and Amazon, all of whom have survived comparable regulatory obstacles in the past. How Nvidia has maintained its leadership in the AI infrastructure market was another important topic of debate. Even as the competition heats up, Jensen Huang and the team have strategically positioned the company by creating GPUs that are increasingly indispensable for inference as well as machine learning. Specifically, they are able to maintain their competitiveness in training huge AI models and implementing those models in practical applications by concentrating on high-performance, power-efficient CPUs. One of the main reasons for Nvidia's continued dominance in the AI business is its flexibility in responding to developments in both software and hardware. For AI tasks, the move from general-purpose CPUs to GPUs has been revolutionary, and Nvidia is at the forefront of this trend. Customers who depend on the company's end-to-end ecosystem for AI development are locked in by its latest software ventures, such as its AI frameworks and platforms. Even while established firms like AMD and Intel and startups like Grok are becoming more competitive, Nvidia has a distinct advantage thanks to their early investments in AI-specific architectures like their HBM-based designs. Nvidia is in a strong position going forward because of its capacity to scale its operations and sustain leadership in important AI technologies, despite some detractors' claims that these supply chain requirements may provide difficulties in the future. In the future, Nvidia's reaction to the intensifying rivalry in the markets for specialist AI chips, such as inference, will be crucial. Nvidia keeps pushing the envelope with innovations